Hey guys, Forex Loss from BK Forex. Welcome to our Forex weekly technicals for 9297. It's going to be a very big week in FX. As always, trading foreign exchange on margin carries a high level of risk and suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading margin and seek advice from a financial advisor if you have any doubts. Well, it is definitely going to be a very, very key week in advance. I think let's start first with the euro dollar, which give me a second. I'm going to pull up the chart. Which definitely broke some key levels here. The 33s went a while back, and then of course the 3250s was a key support level that was given, and ultimately 32s were given on Friday. So we're now sort of had a little bit of a bounce off the right below the 32s, and we may be stabilizing for just a bit. But generally, this whole level here now looks like to be under a threat. So if 3150s goes, we'll look for an unwind all the way up to 3100s, 3050. This is driven by two factors. Number one, the fact that we are now backing off on direct confrontation with Syria, so that's really putting much more bid into the dollar as the safe haven to the euro goes away. And number two, U.S. data surprised to the upside all of this week. The GDP numbers were up. The Chicago PMI was pretty decent. U of M was better than expected on a second revision. All of these things suggest that despite all of the continuing turmoil in the geopolitical world and perhaps a little bit of a stall on the consumer front, the U.S. economy more or less continues to grow apace, and that should give a lot more confidence to the dollar bulls and the Fed taper theory. Although I still think that's very much in doubt until we get the NFPs. And of course, the really big critical factor this week, we have a whole bunch of U.S. data. We have ISM manufacturing, non-manufacturing, but of course, the real big data set is going to be the Friday's NFP numbers. Depending on how well that prints, that could either seal the fate for a positive taper or put us right back into doubt and push the euro back up. So the euro is right now, I think, very much contingent on U.S. data in a sense that the dollar can help itself through positive U.S. News and could very much hurt itself through negative ones. 32 is sort of the equilibrium level now. Now that we backed out to 34, 34 clearly was a double top, and now we're just sort of distributed. But it doesn't mean that we're sort of flushing our way to the downside right now. It could very well be a situation where we consolidate a little bit here and then try to retake the 34s as we remain in this channel trend. The real give back to a further downside is going to be 3150. If we close below 3150, not necessarily just test it, but close below 3150, that would suggest a much more negative structure for the euro, a positive structure for the dollar, and a positive move all the way out to the 3050s, maybe even down to 130, which would be a complete unwind of this whole move that we had. This is actually, it's very interesting because the move that we had was the Fed backing off. This was the Bernanke speech over here. As you can see, big move up, right? As Bernanke backs off the idea of an instantaneous taper. And now if we come back to the idea that taper is indeed on the table, we go right back to this original breakout move around 3050, 3000. So a lot of very interesting technical and fundamental points for the euro to consider, and it's definitely going to be a big week for us to imagine. Dollar yen, on the other hand, not really expressing this dollar strength nearly as well as euro dollar is. 98.50 still remains a very tough level for the currency pair to close at, and it needs to close at that level in order to be able to achieve any further upside. The only positive thing I think that you sort of look at from dollar yen is that you have higher lows. We continue to kind of consolidate here between 98 and 98.50. And a breakout here on a closing basis would indeed be much more bullish for the pair than it has been in the past. So we may be able to get a situation where we could break the 98.50 channel, take a run at that 98, 950, 150 channel, and really put on a much more stronger recovery level in dollar yen with a series of higher lows. But for now, it's not clear because basically we have higher lows and lower highs, and we're coming to this point of resolution. So technically, we're like at this point of a Mexican standoff between the bulls and the bears, and we need to see which side breaks out significantly to give us a little bit of confidence as to which direction the currency pair is going to go to. Cable is just kind of mopping up the back end. 50, 55 remains relative support, but cable is on a relative weakness basis for a couple of reasons, and we'll have to see if this can sort of hold out. Euro obviously getting the primary unwind of the taper move, but cable is also suffering on a secondary basis, on a derivative basis. And again, here 55 is key support, but 54 is the real key support here. This is the 54 level. That gets broken. That pushes us potentially to 53, maybe 5200. Not as much UK data this week, but still worthwhile watching on the UK side. Although I'm not even sure, but I think we have PMI manufacturing and services, so definitely worth watching just to see if the UK economy continues to surprise to the upside. It has been for the last 3 or 4 months. And last, and very much least at this point, is the Aussie, which is really bringing up the rear. Not being able to. Oh, sorry, it's not the Aussie. It's the wrong pair. Here's the Aussie. The Aussie is just scraping bottom with 88.50, a very, very key level here. We're trading about basically around what, 88.95, not very far away from a massive, massive support point here. This was a support point from 2.5 years ago. It bounced half of it. We had a rally all the way to 92, came back, corrected, then came back all the way down here. Now the critical question here, is this a double bottom that's going to hold, or we're going to start breaking to the downside? I would say if we start breaking towards the 88s, it's a very, very negative construct, and it opens up the prospect for a move all the way out to 85s. Of course, we have the RBA rate decision this week. That's going to be very serious, especially one of the more interesting things could be is if they surprise to the downside and actually lower interest rates. Very few people expect that. That would be a shock to the system that could really push Aussie to the downside. Or if they threaten to do so within the next meeting or so, could still put tremendous amount of pressure on the pair. RBA really wants to see the Aussie at 85, and they're doing everything in their power to try to guide it down there. So it's very tough to fight the central bank unless they get some superb economic data to the upside. We have had better data out of China. That's certainly been modestly helping Australia, but it's not been helping it as much as it used to, and that's a key thing. The fact that Chinese positive data is just not giving us any kind of a lift must be very disconcerting for any kind of Aussie bulls that are looking for a rebound. Either case, really, really serious levels of support here at 88.50 that are worth watching, and of course a break of 88s puts in a very negative construct for the Aussie with the potential run now all the way out to 85s. So that's how the week shapes up. A lot of key news, a lot of key levels, and certainly back to business as the summertime comes to an end. Wish you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out.